Welcome to Martechify, a community of marketing professionals interested in MarTech, digital marketing, and AI. I am your host today, Ekaterina Konovalova, and I'd like to welcome to our show Jim Marous, who is one of the thought leaders in retail banking and fintech industry. And I want Jim to mention all those wonderful things that he's doing. I don't want to mess it up because I know he's quite busy. Jim, welcome.
Thank you for letting me be on the show. It's an honor and it's a privilege. I know we've taken almost all summer to get us together, so it's good to be together. So thank you.
Yes, so you publish a very important industry report. So can you share with our listeners more about your work?
Yeah, so I have a multitude of things I have my feet into. As a little backgrounder, I've been in the banking industry my whole career. I started off in a retail bank right out of university and was either in the banking space as a banker, primarily in a marketing space after the first 4 years in banking. But beyond that, I worked in marketing agencies and organizations that served the banking industry and did that basically for the vast majority of my career. For the last 15 years, though, I moved into content creation. And the reason why I got into content creation was basically to not become irrelevant. I mean, that I use that statement not loosely, but I was an age that I thought a lot of people that came to visit me as a banker would kind of pack it in at a certain age. And I wanted to make sure that that wasn't going to be me. So I built a blog 15, 16, 17 years ago almost now, built a blog, which dates me just by that terminology, where I would write about what's going on in the industry based on other organizations' reports. I then came in contact with Jeffrey Pilcher at the Financial Brand, and we talked about maybe working together, and I started writing for the Financial Brand probably around 12 or 13 years ago. And that really opened the door to a lot of possibilities. Doing that as a full-time basis, I also bought at the same time the digital banking report from a OG in the industry, guy by the name of Jim Bruni, and built the report business to support my writing in the Financial Brand. And then that happened at a time when Twitter and LinkedIn were brand new. So I really had a platform for distributing what I was doing on social media. And then around 6 years ago, I decided to start a podcast. I have no idea what really spurred that on, except it was another way for me to dig deep into what was going on in the industry by individual conversations, as you have. You know, I'm sure every podcast you have that you learn more and it continues to expand your knowledge. And that ability to not only expand my knowledge, but immediately share it to the industry, which is really what my passion is, has really made it so it's a revolving door of insights and thought. And then that also opened the door to international speaking. I just got back from Riyadh last week. I was in Salt Lake City also last week, which again provides me the opportunity to not only share the learnings I've gained over, a career of well over 40 years, but also to capture more insights into areas that I'm not as familiar with. And I'm very fortunate. I have the ability to continually learn and to share with some really great people.
Wonderful. So let's talk about financial services then and MarTech. So my first question for you is, customers now expect Netflix level personalization in their banking. And as we all know, there are a lot of regulations in fintech or retail banking. So what is stopping most financial organizations from delivering that, and how MarTech can finally close the gap?
Boy, that's a great question. What's interesting is I think, and I say it on the road quite a bit, that the thing that is stopping financial institutions becoming truly MarTech, leaders is themselves. It is not technology. It's not the budgets. It's not regulations. Even though we blame all those things often, we have the capabilities today to leverage the best technology, the best integrations of solution providers, solutions in the marketplace than we've ever had. The challenge is the financial services industry as an industry is risk adverse. In fact, they're risk avoidance. It's been that way since the beginning of my time in banking. It's what they teach all the way throughout the whole legacy of the banking industry, is that we don't want to take a loss. Well, you can't live in a world that says we won't take risks and be a good marketer. Marketing is a role of testing, learning, evolving, innovating, and all those capabilities really run up against the whole dynamic of doing things as we've always done them. And in our research that we've done for the Digital Banking Report, our 2025 Retail Banking Trends and Priorities, we find a really huge gap between what we know needs to be done and what we do. So as the deployment gets lost, we have more data than any industry. We have more capabilities, more solution providers that can provide the smallest institutions with the capability of actually implementing some amazing things. The challenge is we get in our own way. Legacy leadership has not had a bad year. If you look at banking, it's very, very, very infrequent that a financial institution goes out of business or is not profitable. Now, there may be up and down years, but the reality is the leaders in financial services have had good years throughout their entire careers. In fact, I usually say the majority of leadership played golf together 20 years ago as a group on Monday nights or whatever it is that the night they play golf. And they've gone through leadership together because they've had such good careers. The challenge, as things are happening so quickly, change is happening quickly and everything, that we don't really want to change. I think about the New Year's resolutions we all make. We make a New Year's resolution on New Year's, and within 15 days we go, you know what? I kind of like my behavior the way it was. I don't really want to change everything. And as a result, what happens is we really get in our way of not wanting to really change what we don't think is broken. In the marketing world today, a lot of things are broken, and especially in financial services, because the consumer is seeing more and more examples of how they can be served individually on a proactive or predictive basis from all under industries, ranging from Amazon to Uber to Netflix to Hulu to Google. All these elements continue to evolve at a speed that financial institutions have a hard time keeping up with. They tend to get in their own way because in their minds, things aren't broken. And so that, a long answer to your relatively straightforward question, but I think the banking industry, healthcare industry, a couple more really get stuck on doing things the way we've always done them.
Mm-hmm. And some of them are beginning to innovate these days. So, and obviously with AI, there are more opportunities for personalization, more custom messaging. So where is that fine line between great personalization and dangerous overreach?
It's interesting. The biggest challenge between dangerous overreach and personalization is doing nothing. It's not a matter of degree as to how they're doing things, because in the banking world today, almost all implementations of AI and personalization is being done on the back office. It's being done having to do with fraud and risk. And actually, the banking industry is one of the first industries to use AI to solve those issues, to avoid losses. And now they've expanded that a bit to avoid or to minimize costs, so to cut costs. So automation, transformation, all the back office things that are a lot less risky. However, the financial services industry can only cut costs so much. So at some point, we're going to realize that the benefits of AI will be limited because of our mindset that says, geez, I'm not as comfortable putting myself out there from the customer's perspective, from a MarTech perspective, to show how I know my customer. I say it in all my speeches. The customer wants you to know them, understand them, and reward them. Reward them not with points, but with the ability to say, you're showing me empathy to make my life better, to make it easier, to show that you're actually helping me along my financial journey. The challenge is banking, again, when you start looking at risk as the overall umbrella they're under, they don't want to make a mistake. And so as opposed to actually taking even baby steps towards letting a customer know that they know them, they don't take any steps. The real gap is in not doing anything. I went to Shenzhen, China in 2020, right at the very beginning of the COVID crisis. And WeBank is the largest financial institution in the world, the digital banking organization. And what's interesting is they built their entire customer base, for the most part, on financing phones. What they did, though, as opposed to looking at credit bureaus or something that's similar to that in China, they'd look at the behavior on a phone. If a person is using their phone but not in the same place as their phone, if they're continually 24 hours a day using their phone, they considered them to be risky, so they would not offer them a loan. Everyone else, they would not value as to, are they going to be good customers? Are they going to be bad customers? No, they'd offer everybody else lending opportunities because the risk wasn't all that great in the context of the overall universe. They got rid of those that they knew were going to be bad and managed the rest. In the United States, in the UK, throughout the rest of the world, a lot of it that we're doing right now is trying to avoid that risk and not using AI to truly personalize experiences in a way that organizations like Uber and Netflix and others are doing on a daily basis. So the challenge again is that we really need to rethink that perfection element. I get very frustrated because every single month, twice a month, I transfer money from my business account to my personal account, but I do it by taking a picture of a check and doing it that way, as opposed to a much more seamless way that neither financial institution has ever offered me. They know where my funds go every single day. They know the transfers I'm doing. They know I'm transferring money to SoFi, to Robinhood, to Acorns, to other organizations, yet they never respond by going, we could do that for you. We offer those services. Because I believe they're afraid of making a mistake. They're afraid of putting themselves out there and saying, geez, I may be wrong. I'd rather see my financial institution take a risk of being wrong than not do anything. Because at the end of the day, I'm expanding my relationship to a lot more organizations because my current financial institutions are not showing empathy or guidance in helping me be a better financial steward of my money.
Yes, and you seem to be more of an innovator or more progressive customer, while I can see some people may be more conservative and want to have control over how they transfer the money. I've seen, in my personal experience, I've seen some of the attempts from my bank to check, oh, well, we noticed you usually do these transactions, your behavior changed. So I see some of that guardian stewardship behavior, but I can envision that probably pretty soon banks will start offering more seamless transfer of your money from business account to a personal account. It's probably just a matter of time.
Yeah, and when we talk about agentic AI, I don't see a time in the near future that my agent will just do it. But I do think it will offer the opportunity and say, send me a text and go, by the way, we see that your balance is higher than normal. Would you like us to transfer some money into a higher rate savings account? Or we see that your mortgage rate is higher than what is current the market rate. Would you like us to lower your rate? Now, what happens though, from a traditional financial institution perspective, they see that as lowering the revenue potential. On the other hand, as in my case, personal case, my financial institution never offered me alternatives. And then we decided to buy a small property in Florida. And as part of that, we said, we'll consolidate because the rates are lower for our current home as well as the one we wanted to buy. And as a result, we asked our current financial institution for a payoff number. Immediately, a representative from the financial institution called me and said, oh, we'd like to have your money. Would you be willing to stay with us? And I said, too late. You never were there when I needed you. You never really looked out for me. You looked out for you. I want to work with an organization that's actually going to look out for me. Oh, and by the way, we're expanding our loan portfolio to include another property. And if you had been proactive, you would have gotten that business.
Hmm.
We talk about, other opportunities in financial services. Every time you test drive a car, that dealer will do a ping on your credit bureau to say, is this person safe to give the keys to a car and have them drive off the lot and bring it back? That ping on the credit bureau is something that is available to see in the credit bureau. You can buy information from the credit bureaus of a financial institution to find out that this person's shopping. This is why when you test drive a car, almost immediately every dealer and every manufacturer is coming to you and saying, hey, check us out, check us out. Well, why isn't the financial institution saying, by the way, you may be looking for a new car or a used car? If you want to, we have really special rates that we're willing to offer you today. Are you interested? Now, the customer may realize, geez, they're kind of watching me, but they're being watched by every organization out there. They're being watched by the retailer, the major department store. They're being watched by the restaurant. They realize that when you call up for a takeout order, they'll say, Mr. Marous, do you want to have the same order you had last time? Yes, they're capturing information to make my life easier. In the same sense that you're in a car and your GPS system will say, by the way, do you want to stop at the Starbucks that's coming up 20 miles down the road? Because they know that I go to Starbucks quite a bit. Or they'll tell you about a traffic jam. People are used to information being used for their benefit. Again, the difference in financial institutions is their fear of not making a mistake. A good marketer needs to use data to provide empathy and to provide proactive engagement that makes a customer realize you're looking out for them, and realizing also that that return may not be immediate. So it may be a long-term build, but the benefits can be far greater than simply avoiding costs.
Yes, basically building that loyalty and trust from the customer. All right, well, let's talk about future trends. What can retail banks and fintech organizations do now to stay ahead and not be left behind in a few years?
Well, it's interesting. The banking world has always talked about resilience. Resilience was always coined as how resilient are you to fraud and risk? It's always been on the back office again. Resilience today is really going to be, are you future ready? Are you building a infrastructure that can pivot based on interest rates changing, based on political situations changing, based on a new competitor coming in the marketplace, based on what you need as a financial institution? Maybe you're saying, I need growth of deposits. I need this. Are you building an infrastructure that's ready for digital transformation? In our research, we found that about 92% of financial institutions are going through a digital transformation process. Only 11% have seen results from that digital transformation. What we've learned is that doesn't mean they're not doing well. It means in many cases they aren't measuring it. They aren't really looking at what that digital transformation is. In addition, they're being held back by legacy infrastructure. What's really interesting about the banking industry, that's also interesting about every industry, is there's more technology available to let you build a composable solution. In other words, building small composable solutions for parts of your business that may not impact the overall business. I don't think any organization in any industry is in a position to do a complete core transformation. But we're seeing a lot of organizations of all sizes being able to do these little changes to make banking better. I talk a lot about new account opening. A customer wants, in more cases than not, to open an account using their phone. But they'll only do it if it takes about 3 minutes or less. They aren't going to do it if it's the normal 14, 15-minute process, having to put in information from their driver's license and all this. In the digital world, we now have the capability to provide the information that used to be required for the customer to input directly. Apple Card was a great example, and this is a great example for any industry. Apple Card asked 3 questions of the consumer to open a brand new credit card. Number 1, is this information about you correct? Which meant they were already digging into the archives to say, here's who we think you are. Yes or no? If it was no, the process would be taking longer. But if it was yes, which normally it would be, you're moving on to the next step. What is your annual income? Well, the reality is, as they're pulling the credit bureau, they know what your annual income is pretty much. They're just validating it. And they'll ask for a social security number, or I'm sorry, they'd ask for an email address or a cell phone number. The reason for that is if you're dropping out of the process, they want to get back in touch with you. That was it. And then the next step was, by the way, here's your credit card. Here's your credit limit. Do you want a physical card? And you're thinking to yourself going, how did that happen so quickly? And the reality, this is what a consumer's used to. A consumer's used to their partners, be it a grocery store, be it a retailer, be it a fast food organization, or the financial institution, to know them and understand them to a degree that you're going to get them over the hurdles. The future of financial services is going to be digital, whether if you want to play that way or not. More consumers are opening and transacting digitally than ever before, and certainly COVID ramped that up significantly. But because of everything that's going on around us, because of generative AI, because of the industry moving so fast, we have the capability, we have the obligation to use empathy on behalf of the consumer, to use the best technology available to help them think on their behalf and to offer solutions on their behalf. What is interesting in our research, we find that the smallest institutions and the biggest organizations are the best at doing this. The big ones, they have the money. The smallest ones, they have the leadership that says, we've always been in a fighting stance in the industry. We want to be able to do better. We want to be able to stay in existence. So they're doing things. It's those middle range organizations, those mid-sized organizations that have such a overabundance of legacy leadership, and they've not done things wrong. And so they are still working on the back office transformations that the customer never sees. Now, we don't want to break the trust. So we don't want to have mistakes that are going to put money at risk or put information at risk. So we still have to be very cautious about how we do this. But again, the banking industry, you're going to make headway if you show you can be trusted and you're working on the customer's behalf. For any industry besides financial services, this is common sense. You're living this every day. The challenge is banks just get in their own way with implementing solutions that really, really step out there for the benefit of the customer, which is why Chime, SoFi, Visa, buy now, pay later solutions have done so well because they thought beyond just the regular banking experiences.
That's such a good insight. And I didn't even think about this mid-level organizations when you mentioned the smaller companies, they are more flexible and adaptable, and the big organizations have the budget. But you're absolutely right. The mid-level are the ones who are kind of
Yeah.
lagging behind.
And the good news is, and this is true with every industry, your potential partners to make it so that you can be really smart at what you do are more available than ever. You know, I don't have to hire. I want to hire people that understand AI and understand ChatGPT and understand technology. But the reality is I don't have to hire a lot of them because my partners are going to have them. I want to put that on their shoulders to say, in order to make a better new account opening experience, I'm expecting you to always be the best at that. Or in a loyalty program, I'm expecting you to be the best at that. And if I can cobble together the best solutions, I may keep my core provider, but I'm going to enhance it with a lot of specialists that really make it so my customers get the best of what's possible.
Yes. Well, I have a last follow-up question for you because it sounds like you've built such an impressive career in the financial services banking industry. And if there are any aspiring marketers who would like to enter the field of MarTech in fintech or banking, what advice would you give them?
Boy, that is a great question, and it's one I'm being asked more and more. In fact, I was in Riyadh last week, and I came across a young man. He was probably around 23, 24, was really glowing. He was having a lot of fun, doing a lot of things, had just come out of university, and you could tell he was so full of ideas and ideas that came from university. And he asked, he says, what should I do to have longevity? I said, number one, unlike when I went to university, you cannot rest on your laurels. You cannot think that what I've learned is going to last 5, 10, 15, 30 years. Right now, in today's economy, in today's marketing environment, what you learn in university, assuming that you're learning about the best tools, the best capabilities, the best way of using AI, it's going to be only good for about 2 years. You've got to use ChatGPT, Claude, Perplexity, whatever tool you like to continually enhance your education and your knowledge of what's going on in the industry, because what you've learned is going to be kind of redundant in about 5 years at the most. So you learning, it doesn't matter if it's in marketing, it can be in accounting, it can be in regulatory, in any area. The need for continuous education has never been greater. In fact, I could get into political conversations about the fact that people are very fearful of AI replacing them. AI will only replace those that haven't continually transformed themselves for the future. As I mentioned, over 17 years ago, I made the decision to not ever rest on my laurels, to not ever stop learning. It was a business reason as well as a personal reason. My wife asked, so when are you going to stop doing this? I don't see that happening. In fact, I just engaged a consultancy to work with my YouTube channel and my podcast that I do to make them even better. And she goes, you just invested that amount of money to do that? I said, I believe I'm in it for the long game. And, oh, by the way, it's fun to continually learn. And I think, you have the ability, because you're doing these podcasts, you're in the educational field to a degree, of continually improving your knowledge as part of your business. Many don't. Many may actually be held back by the people around them that don't realize that the world's always changing. So you have to make a decision also. Am I in the right place to take advantage of my continuous learning? Am I continuously updating my LinkedIn profile with recommendations from every single person I come in contact with that will help to build a profile, not of what I know, but of who I am? And I think that's where we fall short. We think everything's a thing on a resume. It really isn't. The reason for LinkedIn today, and if you go through my LinkedIn profile, I have recommendations from 40 years ago. But if you looked at what they were saying, I think they built a pretty good profile of the person I am. And that's who people are hiring. And finally, when you're getting into meetings, when you're getting into events like this, it's not the answers you provide. In many cases, it will be the questions you ask. It's using the knowledge that we're learning from ChatGPT. And I don't know if the audience has looked at ChatGPT recently, but how about those follow-up questions that ChatGPT is asking at the end of your request? And it says, oh, Jim, do you want us to provide some headlines for thumbnails for your YouTube channel? Hey, Jim, I think the first paragraph of what you've written is okay, but I think it lacks punch. Do you want us to help you reframe it? Now, I don't take those things verbatim, but what it does, it puts ideas in my mind into how can I improve what I'm doing. We need to do that as individuals. I think more than ever, we don't have to be the smartest person in the room. And the way to prove it is not by having all the answers. It's by asking the right questions to dig deeper into the challenges we have.
Perfect. It almost gave me an idea for a headline: what banks can learn from ChatGPT follow-up questions, because ChatGPT actually does it. So it proactively thinks about how to improve.
And they don't brag about it, but what they've done, ChatGPT has gone back over, 2 years of me using it to say, I think I know him better. Now, there's other platforms I have to continually reframe something I thought I'd done a couple times and saying, you didn't quite get this right. What I'm also doing in my generative AI solutions, I will tell it what I end up using so that they can become aware of what I like. So, oh, by the way, you gave me 7 options for a headline. I didn't use any of them. I combined a couple of them. Here's what here's the one I ended up using. Remember that these platforms are really geared to make you feel good. So as opposed to saying, do you like this or do you approve of this, which, by the way, they will, and they'll tell you why to make you feel good, go the opposite. say, if this was not a really good headline, what would make it better? Or even better, what makes this one not as strong as it could be? I had an author who said he had 12 chapters of a book, of which every chapter was written by an outsider. Instead of saying, tell me how I can improve what the chapters were, he framed it a little differently. He said, assume that every chapter is only a 1 star out of a 5 star rating. What makes it only a 1 star? So it made ChatGPT really look and say, if there's something wrong about this chapter, here's where the weakness is. And I was thinking, that is just a brainchild. It's really good because it doesn't ask for what it loves giving you, which is pats on the back. It actually dug deeper and said, look out for this. Now, it may not be right. You may say, well, that wasn't really it. But at least you prompted it to look. And it maybe gives you another avenue to say, okay, you're wrong, but you just put something in my mind that I wasn't thinking. You're right. I should revise that.
Oh, I love this ChatGPT extra tutorial. That was so helpful.
Well, I start every day with asking it a question out of the blue. It may be about something in the world or something else. The things that we used to talk about, the hallucinations, are becoming fewer and fewer. The ability for it to ask, why do you want to know this? What do you want to do? Oh, help me build a script for a presentation. I use it for every one of my podcasts as a starting point for my podcast to give me ideas. It almost always gives me a good frame of questions. I always put them in my own words. So I'm trying to make sure I cover everything I want to cover because sometimes my brain's not working quite at its optimal amount. But in addition, when we've gone on vacations now, we're asking, where should we make sure we visit and why? Here's our budget. What should we be doing? Oh, by the way, where are bike trails we should be taking? This is easier than Google to find these pieces of information out. And as it starts to learn more about you, it gets better at what it does. And it kind of gives you a guidance as a human saying, how do I continually get better? How do I ask better questions so I can be better at what I do?
I like how you approach it as a fantastic learning tool to better yourself.
Yeah.
Obviously, there are some people who are very concerned about us giving our power and control too much to machines. And there's a valid concern because it becomes easier to outsource, right? Even with GPS, if you think about it, now a lot of people trust it blindly, even though they know that it takes you to the wrong place, or you still trust the machine. So it's kind of a fine balance. But I like how you pinpointed ways of improving your own learning and basically elevating yourself to the next level.
To your point too, it in for me, it's made it so I want to do more short research because AI is going to feed upon itself. It's going to take answers from its previous answers. So how do I put more thought into what it can do? Well, I'm doing 5 to 7 to 9 question surveys to my market to say, okay, tell me about what's going on in innovation in banking. With that new insight, I'm now giving ChatGPT or AI tools more to work with. That's mine. It's not theirs. It's not building from others. And then I say, now put it in perspective of what the marketplace has found, and it'll compare it to McKinsey studies or Accenture studies. But at the baseline, I'm still given my own research, my own insights, something that's proprietary as opposed to simply regurgitating something that could be sent the same way to you.
Right.
Yeah.
Yes. Well, thank you so much, Jim. It was really inspirational and interesting. I really appreciate your time.
Thank you so much. I appreciate it as well.